Well, mortgage rates dipped below 6% for the first time in about 3 years, only to bounce back up about 0.25% ever since the Trump administration entered into a conflict with Iran. In this video, we're going to talk about exactly what to expect through the next few months. This is a video you're going to want to watch. Now, despite what you're hearing on the news, the first thing I want to say is affordability is the best that we've seen in several years. There were several articles and different posts that had come out of websites like Redfin and NAR that showed that the affordability index, including interest rates, with price, is the best we've seen it in a long time. Now, we're also seeing inventory being higher in about 47 days on market for most people who have been listing between the months of January and March. And about 34% of homes that are selling are taking price cuts. Now, those price cuts can vary dramatically if you're buying in certain states. But overall, right now, we are seeing more inventory, which is giving buyers more selection. And when we head into these latter months of the spring, we get into April and May, we are expecting to see that inventory increase like it does every year. Now, one of the things that everyone's wanting to take a look at is how is the Fed going to react in their upcoming meeting in March? Now, it's about a 94% chance that the Fed is going to hold steady and he's not going to lower interest rates. This is confusing. You know, if you look at some of the reports about the economy, the jobs market, and some of the conflicting news we're getting, there are definitely signs that the economy is getting weaker. We saw a jobs report just a couple of weeks ago. We were expecting 60,000 jobs to be added, and we lost 92,000 jobs. So these are obviously bad reports that you would think would tell our Fed that, hey, inflation is causing some problems in the economy and we should probably ease rates. The big concern right now is oil prices. Because of what the conflict in Iran, oil prices have spiked. Now, most of this is fear-based, and we're probably not going to see the reality of oil showing up in the shelves of all the goods and services we buy for a little while. But just the fear of it alone has caused the cost of oil to go up, and that is an inflationary sign. So it's very unlikely that we're going to see our Fed do anything until we see what happens with this conflict with the U.S. and Iran. A couple interesting things that we've recently seen is that home sales or closed transactions has ticked up, and we've seen some of the best numbers we've seen in several years, and this goes for almost every state in the country. In some states, we're getting close to where the pre-pandemic, we're not going to say the pandemic, but pre-pandemic levels. And so what that means is because of affordability getting better, we are seeing more buyers getting courageous enough to enter into the market. But here's what's important if you're a seller, is sellers still outnumber buyers by about 600,000 units. And so it is more of a buyer's market right now than it is a seller's market. But for a lot of people that are listing their home to sell, they've fixed it up, it's clean, they're listening to their realtor and they're comping it out. There are still multiple offers, and we are still seeing homes selling less than the average 47 days. I've had several clients who've been in multiple offer situations. So this isn't a bad market by any stretch of the imagination, but I would not say it's a buyer's market, and I wouldn't say it's a seller's market. It's just showing improvement from where it's been the last couple years. As we head into the spring, this is by far the busiest time of year for real estate. A lot of realtors call the grass sucker grass because everything's beautiful, and a lot of people took their homes off the market in the third and fourth quarter of 2025 to list their home this time of year going into the next few months. So we're going to see inventory increase. The big challenge right now is how is the conflict in Iran going to have an impact on the buyer demand? Now, I will tell you firsthand that I have seen some people take a step back because of what's going on in our world right now. And there's really no way to know how this is all going to end. But one thing you got to remember is we do have the midterms coming up. And I don't know exactly how some of our politicians think, but I have to believe that whatever's going on over there, they're going to want to get it ended pretty soon because no one's going to want to head into these elections with high inflation and a war on our hands. But you and I are going to have to watch and see what happens. The good news from here is most of what's going on with mortgage rates is reactionary. And when things settle, and they will settle, the fundamentals tell us that we're going to see lower interest rates coupled with a lot more inventory or selection for buyers to buy properties. So I, for one, think that some of the best deals we're going to see in a long time, or since they spiked in 2020 and 2021, they're going to be seen this year. And if you saw one of my videos I did at the beginning of the year, most experts were predicting rates being at where they are right now, slightly lower, and they were predicting to see a 4 to 5% appreciation rate for homes going up in value this year, where they've been flat and stagnant many months over the last 12 to 15 months. So if you guys have any questions or comments, please drop them below. I do check all of them. And as always, I hope you and your family have a great spring. We'll see you soon.